What is up, YouTube? Welcome back to Stocks by the Numbers. Today is, what's today? Wednesday, right? Today's Wednesday, the 29th. We got about 20 minutes to go here before the close. I was kind of just hanging out, going back and forth with people all day in Discord, so my apologies for not coming to you sooner today with a video, but I wanted to talk about just a phenomenal call that we nailed here on this channel, going all the way back to right after the bull dropped here in 2023, and I gave multiple updates throughout the years as the stock was continuously climbing, showing us phenomenal percentage gains from the original date of the video. Name of the company we're talking about, Rolls Royce Holdings, ticker symbol RYCEY is the one I'm looking at here. We're in the States. This one, as you can see, trades on the OTC, that is the over-the-counter market. Of course, on the London, I believe the symbol is simply RR for those of you in the UK. And, you know, it's all about the red, white, and blue, baby. And I'm not talking about the States. I'm talking about the Brits. And right now, we have a stock that has not only chunked up in the last couple of days right here, sitting at 333 currently, up a dime, 3.1% here on the day. But as you see, we hit new highs here of 334. But more importantly, if we back up, you will notice that, of course, I mentioned that we were undervalued in the numbers, in my opinion, and we were going to continue to climb. And then our first level here, 254, was hit a while back. That's, I believe, was about the time I made the last video. And now, as we see, my next price target level that I mentioned, in my opinion, was going to be $3.30. And right now, the stock is at $3.33. Absolutely nailed that call. Of course, if you got in from the original point of the video, you are approaching roughly a 200% return in less than 12 months. So I obviously have to chalk that up as an absolute massive win. And this is how, in my opinion, you guys should be investing. I know trading is a little bit different than investing. I know that we like to look at the technicals. We try to find, you know, like a head and shoulders or a rising wedge, and we try to time our calls and our puts properly and hopefully try to catch the pop or the drop and see some crazy returns. However, when we move towards the investing side of these stocks, this is why I try to tell you guys that the fundamentals are key, especially when it comes to long-term investing. And you're seeing it right here in real time when we look at companies like Rolls Royce, when we look at companies like Fubo. Fubo, when I first started looking at Fubo, what did I say? I said that the company's coming off reverse stock splits, right? They beat the crap out of the company, which was completely justified and understandable. However, once the revenue started coming in and the company began to beat earnings 1-2 quarters in a row, that's when I made my video and then followed up with updates, basically showing you guys that in the numbers, in my opinion, the stock was massively undervalued and really we should go nowhere but up. And that was basically the same exact thing that I said with Rolls Royce. Because again, looking back over the years, we can see how much higher the stock truly was. And then we can see basically going into 2020, and then of course we had our lockdowns and everything, but that was basically the turning point here, as you see, March of 2020, and the stock just completely fell off a cliff and dropped down to sub $1. Again, I'm looking at RYCEY, I'm not looking at RR right now, but that's the point of the story. This is basically the Buffett method that you're seeing in real time. So again, what is the Buffett method? Buffett method is you find a brand name company like a Rolls Royce. Everyone knows about it. It's been around for a while. It's one of the larger companies over there in the UK. So this is why I was saying the whole time here after it kind of died, so to speak, and then kind of started to bounce back. This is why I was saying they're probably not going to let anything happen to this company. And once it gets beaten up and you can buy a brand name stock at a fair valued price or even at a discount, that is when you step in, especially for the long-term portfolio. Now imagine again, you had an account that you were doing long-term investing in, and let's just say even you put like, you know, something small, even like 10 or 20,000 into a situation like this. Again, you are up 5 figures in profit right now, and in my opinion, it's not going to stop anytime soon. Of course, in the immediate short term, we could start to have a sell-off here. We'll take a look at stock charts in a second, but again, more importantly, just looking at the overall picture, in my opinion, regardless of what will happen in the next day, week, or even month, I am still very confident that Rolls Royce is going to continue higher, taking the next leg higher, and we can see my next price target. Personally, I am looking for $5.04, which of course is roughly like 50% higher from where we are now. And if you got in originally, obviously you're really going to be happy if the stock starts climbing into the 4s and into the 5s. But overall, again, I still like Rolls Royce. You know, we come back, we look at the numbers again, they post semi-annually. You know, just look at these 2 quarters, basically, since the time I initially looked at it. And they come out, excuse me, not quarters, semi-annual reports, I guess we'll call them. But just look at, this is why I say, just follow the revenue. Again, I know they took hits, they were coming in light, they were beating them up. But we knew that the company wasn't going anywhere, and it was only going to be a matter of time before they really began to turn it around and the stock began to climb. Now we can see, look at the chunks here that happened just in the last couple of days. The stock got up to about $3 and then absolutely exploded here. And as we see, sitting here at 333. Now, of course, we are now outside of the top Bollinger Bands. The MACD has been absolutely raging. Now we hit our price target, our first price target line, our second price target line of $3.30. So this is why I'm saying now, look at the RSI here on the daily, over 80.5. And you can see as it hit that 70 benchmark, it did continue to go higher and then, of course, pulled back and recently chunked upwards. So, of course, the stock could continue to climb because, again, we are technically at 52-week highs, so it could keep going for a little bit. And this right here looks like a bullish hammer, which, of course, is a bullish indicator. So this is why I'm saying we could potentially have maybe another day or two of gains here, jumping into the 340s, perhaps. However, the RSI is pretty high, and the MACD, again, has been absolutely raging, basically, for the whole month of November. So, unfortunately, like we say, you know, what goes up must come down, and I'm not necessarily saying that we're going to pull all the way back to, like a 50-day moving average level here of about 270. That might be a little extreme, but even a pullback here to about this $3 level where it hesitated and kind of bounced around for a little bit, I can see a retest of that happening. However, again, technically on the daily, we do see a bullish hammer, so we could see another green day tomorrow. Switching over here on the weekly as well, we can see that we have now broken out and gotten out above that top Bollinger Band. And of course, more importantly, since the bull drop, the stock has stayed above the mid-Bollinger Band, only retesting twice and then immediately bouncing up and chunking up very nicely after that retest. So again, a sell-off here might piss you off a little bit in the short term. However, looking at the technicals here over the last several months, a pullback not only could be justified, but it could also help set the stock up to take another leg higher. So, you know, if it does pull back, try not to look at that as a negative is basically what I'm saying. But the RSI here on the weekly, we've seen it at multiple times get above 70 and even stay there. So now that we climbed up here, as we see, we're up to almost 79 on the RSI on the weekly. Of course, could be an indicator that we could begin to sell off. However, history has shown us that, especially on the weekly here, that is not necessarily a guarantee, so to speak. So the RSI could definitely keep climbing in the weekly, perhaps. But unfortunately, only time will tell. As of right now, again, like I said, looking at some of these technicals, we really could kind of go either way. New highs, potential bullish hammer on the daily. We could take another leg higher. Again, broke out above the daily and the weekly top Bollinger Band. And the daily and weekly RSI is above 70. So this is why I'm saying we could potentially have a pullback as well. However, on this jump now, on the weekly, we had the MACD cross to the upside. So we're going to have to see in the next day or two where they want to bring it, if they want to, again, sell it off to retest the level before taking it another leg higher, or if they just want to continue to run it. But long story short, I'm just really hoping that a lot of people didn't miss this, and I'm hoping that somewhere along this rally, you kind of understood what I was bringing to the table. And hopefully you did step in, even if it was high ones, low twos, and obviously now at 333 new highs, you're up nicely. And again, in my opinion, I think there's still more room to go. And 504 is the next price target that I'm personally looking at. We're seeing a market cap now after this rally of 27.6 billion. The PE is still down to sub 13.5, which of course is a little undervalued in my opinion. And our beta here, again, the beta is the volatility of the stock in relation to the overall market. And as we see, the beta is less than 1. Beta is 0.8, which means it's 0.8 as volatile as the market. And that's another reason as well. When you look at some of these brand name companies like a Rolls Royce or like a RYCEY, HSY up here, you'll see that the beta is usually like around 1 or sub 1. And that's why, in my opinion, especially over the long term anyway, this is why I feel you should be utilizing this Buffett method. You look for a stock like a RRYCY, or I know Disney was more back in the day. Now it's kind of volatile. But again, these brand name companies, Rolls Royce, you wait for them to sell off, become more fair valued or potentially even undervalued in the numbers, and then that is when you start to build your position and buy into the stock, right? So if you're seeing this video now at 333 and you're like, oh, is it going to 4 tomorrow? Like, I can't tell you. Right now in this moment, I can't tell you, but I could tell you this whole time here, it was a buy, and I was basically mentioning it consistently in my long-term call-out channel in the Discord. And I gave you guys, I think, about 3 or 4 update videos along the way here throughout this year. So, again, unless you had no idea this channel existed, you probably should have been involved in the situation. But, of course, that is all hindsight. But going back here, looking at the numbers, you can see 88 billion and then 88 billion, right? Which is 17.6 billion. And we have here a market cap of 27.6 billion. So this is why, again, even conservatively, even if we go 2 times that annual revenue, what did we say, about 17 billion. So you're looking at a market cap of about 34 billion, which means, again, the stock could easily keep climbing conservatively. I'd say about another 20-25% before actually trying to calm down and go into an actual sell-off momentum shift, kind of, so to speak. But obviously, we'll cross that bridge when we get to it. But you can see just how steady. I don't know why these numbers are different, but you can see just how steady and stable it's been rebounding. Again, from where it came from, I can understand why they beat it up and brought it down. Revenue chunk lower, profits fell off, and now as we see, we're starting this U-turn recovery, and that's why I'm saying over time, just look at how high it was. And again, I know it's maybe not the same company it was as compared to these years back, but overall in the numbers, again, in my opinion, I actually still like Rolls Royce. I do think if you give it some time, it will get back to roughly that $5 level. And of course, the best advice I can give you is try to time your spots. If we see this stock going up, then obviously what do you want to do? Like I always say, you want to buy the dips and you want to sell the rips, right? So even a situation like this, as it was pulling back to this trend line here, as you can see, this is mid-October, right? It hit that 254 trend line again, then it slightly broke it for a few days. So this is what I mean. When we have a stock that's hitting new highs and then it begins to sell off and take a breather and come back down to earth for a second, that is where you need to know to buy the dip and get ready for the next rip. And again, even if you bought it here at 2.5 and then you sold it the other day at 3 and you missed out on this pop up to 330. I mean, listen, again, like I always say, no one is ever going to time the absolute bottom and no one is ever going to time the absolute top. Your goal should not be to I know we want to make money, but your goal should not be to make as much as possible just holding a situation, waiting to hit like a certain break point or benchmark of profits before you take the money and run off the table. Remember, your goal is to make money and make profits. It's not trying to make $1 million on one trade. It's not trying to come off like some financial stock guru, again, timing the bottoms and timing the absolute tops. That's not what you're supposed to be here for. You're here to make money. So situations like today, right, major indices like dropped down, they started selling off and turning red. If at 1 o'clock, you stepped in and you bought puts on SPY or QQQ, right, and then they started to chunk down, now all of a sudden you're up in profits, these indices are red, you got to take the money and run, my friend. That's just my opinion, though. I know everyone trades different, but again, like I say, this is a trader's market. In my opinion, you have to be in and out. And a situation like this, again, even earlier in the Discord, my calls have been kind of hit and miss for the last couple of weeks here during this random November rally. However, again, a situation like today, call out some QQQ puts, some DIA puts, all of a sudden the indices start chunking down. Your options are probably, starting to climb 10, 15, 25% up in profits. That's it. Boom. You're in, you're out. You have to take the money and run. Especially if you're an active trader. If you're waking up every day looking to buy or sell or take a trade, no matter what the hell's going on, just because you want to be active, then of course you have to be out when profits are up. Random disconnection there. But, obviously I'm going off on a tangent. I'm talking more about advice here than Rolls Royce in general, but it's only because, again, there's just not much to say. We looked at the numbers, we felt it was undervalued, we felt it was a good entry price down here, even $2, sub 250. This whole time I was saying, just buy it, just buy it. And now we can see that we are not only chunking higher from our first call and not only hitting our first price target level, but of course we have hit and broken above our second price target level. And now, as I'm about to end the video, there's 3 minutes left in the trading. The key level is 330 and the stock is here at 332. So unless this closes at 330 or potentially below, then chances are we are going to be up tomorrow. But of course, we're going to have to take it from there. Only time will tell. But again, this is why I started making the videos, because I understand it's slow and it's not very exciting, and you don't always double and triple your money every day like you could with a speculative option position. But when we're talking about real investing, something like Rolls Royce down here at $1 or $2, that was a layup. In my mind, it was almost guaranteed that we were going to make money. Same thing with Fubo. They beat it up. They sold it off. Now it was undervalued in the numbers. Revenue started to chunk in, coming in above analyst expectations. Now we know that we have to strike and we have to get in because it's going to go up. That's it. It is that simple. So those are the situations you want to look for. And again, just hearing from you guys, oh, AMD, dipped down, it's been selling off. I'm speaking in generalities. I'm not speaking in specifics here, but I'm just saying, like, in general, that's how you guys should be looking at these situations. Oh, AMD was up here, it's been selling off, whatever, 7% for the last month, and, if I see it bounce off of this key level, then I'm going to get in because now it's more fair valued and potentially undervalued in the numbers. So if they do bring it down to that level, it's going to have to bounce and climb back higher just because it's simply undervalued. And this is why, again, I know some people beat me up with certain plays, like when I talk about Palantir, which, again, I'm very happy it worked out for a lot of you, but in the numbers, technically, it is overvalued. So if you're looking to take a position in something like a Palantir, what would you do? You would wait for the sell-off, and you would wait for the dip, for it to come back closer to reality, to more of a fair valued price, and then you would start to accumulate a position. You don't just buy it now at 1986, hoping it goes higher, and then if it drops back down to 1415, you start bitching and cursing. That's really not how you should do it. I mean, of course, if you really want to get in, you could buy it and just, average down over time. But again, this is why we pick our spots. Someone asked me HSY and Tootsie Roll were the two confection companies that someone brought up in the Discord. And they said, oh, Halloween's here. It was about a month ago. And they said, oh, it's Halloween time. You know, is Hershey a buy? Should I buy Tootsie Roll? And I just looked at Hershey and it was just overvalued in the numbers. Again, I think the stock was like $210 or $212 a share. And I said, no, it's going to go down before it goes up. Wait for a fair value. Wait for a better entry. And the stock continued to sell off into the low 180s and hit new 52-week lows. And then when I said in Discord, in my opinion, I think it's fair valued, I think Hershey's going to reverse and start going up. What did it do? It immediately, basically day after day, was green, started chunking up back in value, and got back to 200 plus. And I know for a fact we had a couple of people in the Discord that jumped in HSY on that dip and made money on that rip. So I know it's very stressful. I know it's a lot to take in, especially when I make a video. Because again, I don't write a script like everyone else does. So I'm just going off the top. And I'll talk about this stock, Warren Buffett, the markets, bond yields. I don't know. I really don't even know where this video is going to go or where it's going to end. But again, long story short, there is nothing wrong with utilizing the Buffett method, because even if you don't follow it 100% to the T in your account, to completely dismiss it would be foolish. The most successful investor in the country, to not follow or at least keep an open mind for how he would look and analyze stocks and when to buy, when to take positions, to not even take that into account would be extremely foolish in my opinion. And again, it doesn't always work out, but look at some of the returns that we've seen. If you go back from when I first made videos on the RYCEYs and the FUBOs of the world, we're approaching several 100% returns. If you got in, of course, from the original point and continued to hold for the long term. These are not nickel and dime returns. Again, even in a bull market, the average advisor on Wall Street, if they're lucky, shows their clients anywhere from 10 to 15% returns a year. And again, just on the RYCEYs and the FUBOs, these positions are up, 100, 150, potentially 200%. And that is nothing to sneeze at. And I'm going to end it there, because I'm talking too much. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are very rocky and uncertain lately, and they've been very volatile. We come out of the gate, we're still climbing off of this rally. Now all of a sudden, everything just reverses and we drop down and we're red now. So I can appreciate the fact that a lot of you may be struggling and may be very stressful, which is why I always say I want you guys to stay sharp, stay positive, stay confident, continue to learn, even if it's not from me. Continue to learn, continue to absorb knowledge. You need to be better tomorrow than you were today. It's as simple as that. So I want to wish everyone success. I hope everyone makes a couple of dollars. I want to thank you guys for stopping by. And I'll catch you in the next vid.